Let's welcome on board Andrew Freris as well and talk about what he's anticipating from the Jackson Hole Symposium. Andrew, hi, good morning. All eyes on what the Jackson Hole Symposium, famous for some key critical announcements, is going to entail this time around. Any reason for markets to worry? Any hint of taper tantrum? Or do you think that's well digested in the price right now by equities?
Look, my eyes, boring. We have done that before. Markets are pretending as if the Fed has never raised interest rates. Hello? Back in 2016 till March 19, the Fed raised interest rates by nearly 220 basis points. We know exactly what's going to happen. This is a huge surprise. The Fed is going to raise interest rates. Yeah, I know. I'll tell you exactly what's going to happen. Okay, the dollar is going to strengthen. Bond yields are going to increase. And the stock market is going to take a dip. Big deal. Now, will it happen or not? Well, that's an altogether different proposition. But frankly, I much prefer to try to understand what is going to happen if it happens, rather than saying, oh my God, we are going now not to have zero interest rates. We had zero interest rates. We didn't have zero interest rates till March year 19. When, of course, the COVID really blew out. And that, of course, derailed completely the attempts of the Fed to increase interest rates. But otherwise, we know exactly what's going to happen. Will it happen? I don't think so. I think the delta spreading is putting an enormous pressure on uncertainty. If I toss a dice, I know exactly that I have one chance in 6 of something happening. With the COVID, there is absolutely no way of calculating any probability at the rate and where it is going to spread. And hence, it makes economic decision-making nearly impossible, okay, because it is against an uncertainty background for which there are no probabilistic statistics. Sorry, it sounds very complicated, but it is very simple.
Well, yes, all of our, our mathematical probability tables, calculations have all gone for a toss with COVID. A health crisis, of course, cannot be put down in numbers. It's very difficult to do so. Andrew, let's change it not from interest rate increase. Rather, let's talk about the tapering bit, because that's when the central bank will say, look, I'm pulling the plug. I'm not going to be infusing that $120 billion. Maybe it'll not be a one-shot thing, of course. It'll be a gradual, a cutback on the liquidity infusion exercise, aka tapering. What about that, Andrew? What's your thought process on that? Do you think that also will just be a one-time event that the market will digest and then move on from?
Absolutely. Okay. You don't need the Fed to say, okay, interest rates are right now zero. We're going to put them up by 25 basis points. All they need to say is we will stop adding liquidity. Now, this is not the same thing as withdrawing liquidity from the market, but it is the first stage to progressive pressure being added on interest rates. So in a sense, it is killing you slowly as opposed to killing you at a single go. But my emphasis is the markets are treating as this is unknown territory. It isn't. It is utterly familiar. I remember it as if it was yesterday. Hey, the Fed started pushing up interest rates. Yeah, big deal. Except, of course, they are going to announce it at Jackson Hole, which was supposed to be a live performance. It was supposed to be a live conference. And now they're going to have it online, okay, because Wyoming is under a wave of Delta infections. So, it is biting at their heels that they cannot be doing something over which they have A, no control, and B, over which, as you rightly say, there is no probability. So if you want my guess here, this is not a forecast, is they are not going to increase interest rates or announce a specific time and date for the tapering.
Okay, interesting. Andrew, good to have you at the show as always. Thanks for taking the time out.